In today's video, I'm going to teach you how to use the options chain on TradingView. Start on any stock chart. On the right edge near the bottom, look for the 9-dot icon labeled Products. Click that. Then select Options. This opens the options chain alongside your chart, so you can analyze contracts without leaving your workspace. At the top of the chain, use the expiration selector to filter contracts by date. Pick the specific expiration you want to study weekly or monthly, so the table only shows what's relevant to your idea and timeframe. By default, you'll see the by strike view. This is the classic layout with strikes in the center, calls on one side and puts on the other. Each row is a strike price, and the columns show key data such as bid, ask, volume, and delta. Bid and ask indicate the current market to buy or sell that option. Volume shows how actively a contract traded today. Delta reflects how much the option price is expected to move for a $1 move in the stock and is often used as a quick gauge of directional exposure. If you prefer to compare across dates, switch to the by expiration view. Here, expiration dates sit in the center column and the strikes move to the top selector. This transposed layout is helpful when you want to keep a strike constant and quickly see how pricing in Greeks vary across expirations. For a cleaner workspace, click the gear icon at the top right of the table. Use it to change the number of rows displayed 10, 20, or all sort strikes in ascending or descending order. And choose which of the 13 data columns to show. Common additions include gamma, zeta, and implied volatility. Start simple with a few columns, then add more as you need deeper insight. To dig into a specific contract, click any row. A side pane opens with expanded details and action buttons. Use this to confirm all the specs and review the full set of Greeks before moving forward with your plan. When you are modeling trades, open the Strategy Builder. It lets you construct custom multi-leg strategies and view payoff diagrams so you can visualize potential outcomes and see how legs interact before you commit. Finally, pay close attention to implied volatility in the options area. It measures how much the market expects the stock to move. Higher volatility generally makes options more expensive but can increase potential returns if the stock moves sharply. Understanding this balance is key to shaping your risk and reward. Thanks for watching.